What is going on, traders? Welcome back to the Traveling Trader. Happy Wednesday to you. Glad to be back home. I was out of town for a few days. I was on the East Coast in New York. Looking at the market cap, let us just jump right into it. We're at 322.8 bill. The Bitcoin dominance is over 60% at around 62.5. A couple of things happened since the last video we made. However, if you're part of the Discord, then obviously we've been keeping up to date on the markets and whatnot. But if you look at Bitcoin, we did suffer a 30% retracement, a 30% correction from the recent swing highs that we saw between 13.8 and 13.9K. Now, is this enough of a retracement to, continue the bull rally and surpass the recent swing highs? Well, if we're talking about in comparison to recent history, yes. If you look at Bitcoin on the 1 day, there was a period back in November 2017 where, we fell to around 5,800. But from 5,800 all the way up to 20,000, we really had only one significant correction, maybe a couple if you're including the wicks in the calculation. But just from eyeballing it visually, you'll see here there was a pretty big correction that happened between the swing high of around 19.7K, and we dropped all the way down to 13.6K. That's a 31% retracement. We saw that back in December. Now, if that happened now and, we went from 19 to 13, people would think that it was the end of the world, kind of in the same manner that is going on now, right? When you look at what's happened just recently in the last few days, this is on Bitcoin's 4-hour chart, you'll see that we declined from, again, 13.8K all the way down to around 9,500. This is a 30% correction. Now, if this was the stock market, this would be a lot more of a drastic and poignant erasure of gains, right? But this right here is expected in the crypto world, where you do see gains and losses in the double digits many times over, multiple times throughout the year. It's not even out of the ordinary, right? So yes, a 30% decrease is enough to resume the rally and surpass recent swing highs. It's actually healthy. You want to see that. That's why we have indicators such as the RSI and the MACD, and you have volume indicators that measure cumulative volume like the OBV, the on balance volume, right? You want to see these things cool off, because in nature, as well as in the markets, you can't go up in a linear fashion forever. There has to be some sort of regression to some sort of mean. So what does that regression look like, and how do you play it? How do you profit off of this? Well, again, if you follow me on the Discord, if you follow our group, you'll see that I did put out buy signals at key levels. And if you want access to the trade alerts, link is in the description. But I put buy targets at key levels. You'll see here my buy targets are at the 0.5, 10,800, the 100 MA, which is the moving average, at 10,300, and the 0.618 fib at 9,900. This isn't magic. These levels are identifiable on the chart, and we definitely made some gains from buying at these levels. So firstly, obviously what we saw were a few bearish trends. You had the bear flag that was forming here, right? Again, this is on the 4-hour. It obviously gives you faster information than a 1-day would. That bear flag ended up being part of a head and shoulders, which is a bearish pattern. I'm going to draw it really sloppy here, but you'll see for your own reference. It ended up being part of a head and shoulders, and the bear flag plus the head and shoulders plus the weakening volume, we started seeing a decline. Now, the levels that I just identified, I used a combination of things. You can use many different things to determine support and resistance levels. In this case, I had a Fibonacci retracement drawn. I have the moving averages, right? There's the 21 EMA, the 50, the 100, the 200 MAs, and you can use key historic levels. So that's how I identified these levels. There was the 100 MA here. Once we broke the 50, then you can look to the 100 MA as a potential point of support. There was the 0.618 fib level, which is also a key level, especially in retracements, People tend to forget that the 0.618 fib level in retracements is a very key bounce off level. And if you do believe that we are in a bull market, then you have to look to these levels for buybacks. People are so comfortable with buying at 13,000 or 13,500, but they're not comfortable buying at 9,800. I know it's against human psychology to not want to invest or put money into something that's declining, but that is a part of our ape brain, our monkey brain, that we have to eradicate if you want to be a successful trader. You have to get comfortable buying in the red. Obviously, I'm not saying anytime you see red, buy, but as you get better with these things, as you improve your technical analysis, as you can start identifying these levels and knowing that we're still in a bullish rally. So these dips are significant, and one of the only ways to make some serious change is by buying at huge discounts, right? So if I told you that, you could buy your house or your car or whatever, a car is a depreciating asset, but, buy a house or buy some sort of investment, buy Amazon stock or buy gold. If I told you that you could buy that at a 30% discount with the idea that it will be plausibly more valuable in the future, of course you would do that. Now, personally, I believe that the bull rally will continue and will surpass recent swing highs. That's just the way that the market cycle is showing itself to be. Obviously, this is a market, anything can happen. We are not in this for fortune telling, right? What we're trying to do is identify what is the most probable move and then adjust our trades off of that. Anyway, we currently see Bitcoin lodged in between the 100 MA and the 50 MA on the 4 hour, and it's using the 50 MA as resistance. I would like to see the volume pick up a bit, but that is a product of a retracement, and in order for there to be a rally, especially in crypto, this volume will have to start picking up. Now, this is what volume levels look like before a rally. If you look historically, you'll see that before a rally, we have this really weakening flat volume that looks like, interest has waned before we see a sudden uptick. Now, again, I said this in the Discord. I might have made a video on this, but if we look at the 1 week on Bitcoin, there is a key level that it is trying to close above, right? And it is this level here. And it's clear that this is resistance now. So if you look at this key level here, this goes all the way back to January 2018. It actually goes back to 2017 because we see that same level. If you extend this line out, you'll see this candle here and this candle here finding resistance as support at this key level going all the way back to November 2017 on the weekly. So this level, after we crashed from 20,000 and went all the way down to below $9,000, we see this level acting as support. 1, 2, 3, 4, 5, 6, 7 candles finding resistance at this level. So of course, naturally, this is going to be a tough level to break. And we see last week, if we had closed above it, then the bull rally would have likely continued, right? But we saw a huge wick above, which is what took us to the 13.8K, and then we closed below it. So anybody that tells you that the technical analysis or the level identification is not valuable or beneficial in allowing you to set up your trades doesn't know what they're talking about. Again, technical analysis is not about predicting the future. We're not fucking Nostradamus here. All you're trying to do is shape your trades based on what you see on a chart and try to identify what is the most plausible or probable move and adjust accordingly. Nobody knows what the future is, but there are likely moves and there are unlikely moves. And right now, the most likely move was that we would see resistance at this level. Now, here is the bullish and bearish scenario. The bullish scenario is obviously that we break this level at 11.8K and we continue on the weekly. We close above this and we continue the bullish rally, right? That is the bullish scenario. The bearish scenario is that we bounce around in here for a while. The longer that a level is tested, the stronger it becomes. So we could see a retracement back down to this level that we see here, which we already hit once at around 9,800, between 96 and 9,800, a level that you see here. And if we break that, then the next logical move would be the 21 EMA. The 21 weekly EMA is this white line here. It's currently sitting at around 7,500. Now, what would that represent in terms of a price drop or a retracement? That would be almost a 47% retracement. Again, we don't need to follow exactly what happened last time. 30% is enough of a retracement to continue the bull rally, but we could fall further down because we don't need to follow exactly the same pattern that we did last time. Now, if you're pointing out that the RSI is overbought here and that somehow is a negative, just look at how often the RSI spent in the overbought territory back in 2017 to 2018. Here's January 2017, and here is January 2017, January 2018. But you could see that we really didn't cool off on the RSI. It's not like we have to go from overbought to oversold back to overbought. The RSI on the weekly especially can bounce around within a pretty tight range and remain overbought or oversold for a very long time. So this here doesn't really concern me with regards to Bitcoin's price. What I'm saying is this isn't going to be the reason that I think Bitcoin starts, tanking because the RSI is overbought just once or twice here in the last few weeks. So I'm going to be monitoring this weekly very closely because it's obvious that Bitcoin is now being dictated by its weekly chart. We need to close above 11.8K to continue the bullish rally above this resistance line here. And if we do, I think we will surpass the recent swing high that you see here caused by this wick. However, I do have a trailing stop limit in order to protect my profits. If we do see a drop to 9,800, I'll already have exited for profits because I don't want to lose the profits that I made by buying the recent dips. And obviously, if we fall down to 7,500, which is very possible, I'm not saying it's going to happen, but it is a plausible move if we take the bearish scenario into account, then I'll definitely, for one, I will already have been out with profit, but I will definitely be eyeing this as a buyback level depending on what Bitcoin does on the weekly. Before getting into the traditional markets, I'll just talk about a couple of swing trades that we had. We had a successful swing trade on Link that really only took a couple of minutes to rear its head, which was pretty funny. It happened over the weekend, but Link was showing a series of bull flags on the 60-minute chart. We played the breakout of that, and then our swing trade on Litecoin from buying the dip at 112 already played out as well. So if you want access to the trade alerts, link is in the description. I'll go over the traditional markets because we do also do stock trade alerts. If you want access to the stock trade alerts, you have to be part of the diamond level and above. 32% gain on Symantec. You see it jumped here, this huge gap here. There was news that Symantec was going to be acquired, which caused around a 13% spike in its stock price overnight. We've been in Symantec for a while now, buying the dips here at an identifiable demand zone. And we are now up 32% on Symantec, have our stop limits set as well to continue to take profits on this. The S&P 500 is on the verge of, well, it is right now at an all-time high, but is on the verge of hitting 3,000 on the S&P. This is the SPY, which is the ETF that trades against the S&P. If you follow me on TradingView, you'll see that on June 20th, what is this, 3 weeks now, I published an idea on TradingView saying that we could see all-time highs on the S&P and that it's mirroring exactly what it did between 2015 and 2017. And you'll see here the S&P following that path now, where we break out of this resistance from all-time highs after forming an inverse head and shoulders. We will potentially come back to test that resistance before inclining. So there might be an opportunity to get the S&P, the SPY, at a discount one more time before seeing all-time highs. Obviously, that depends a lot on news as well, what happens with the China trade talks, etc., etc. So that is it for this video. Go ahead and subscribe to the channel if you haven't done so already. Again, if you want access to the trade alerts, link is in the description. You also get access to the private chat where me and the trading group discuss trading ideas, charting, etc., entries and exits. It'll cost you less than a cup of coffee a week. Leave a thumbs up if you got anything out of this video. If you have a question, comment, agreement, disagreement, leave that in the comment section below. Stay safe out there, guys. Peace.